I can say to my new Samsung Galaxy S25 Ultra, hey, find a keto-friendly restaurant nearby and text it to Beth and Steve. And it does, without me lifting a finger. So I can get in more squats anywhere I can. 1, 2, 3.
Will that be cash or credit?
Credit. 4.
Galaxy S25 Ultra, the AI companion that does the heavy lifting so you can do you. Get yours at Samsung.com. Compatible with select apps. Requires Google Gemini account. Results may vary based on input. Check responses for accuracy.
This episode is brought to you by Indeed. When your computer breaks, you don't wait for it to magically start working again. You fix the problem. So why wait to hire the people your company desperately needs? Use Indeed's sponsored jobs to hire top talent fast. And even better, you only pay for results. There's no need to wait. Speed up your hiring with a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Welcome to the Daily MBA, where business wisdom is served fresh and fast, straight from one of the top MBA programs in the world. I'll give you summaries of my lectures and readings, as well as the most important insights gained from an MBA, so you can apply all of this knowledge in every business. Let's get started. Hi! In today's episode, I'm going to start explaining a lot of things around FinTech. And so you may be hearing FinTech as a buzzword because it's a very popular industry right now, or a topic that you can read on. But if we go to its origins, FinTech, it's just a word that's combining financial with technology. And so this is basically what FinTech is going to mean. It refers to the integration of technology into the financial services that have already existed. And so this may include robo-advisors, payment apps, peer-to-peer lending apps, investment apps, crypto apps, neobanks, digital banks, all of these things. They're all going to be embedded in FinTech. And I believe FinTech is something that you should be learning about because there's a lot of potential in putting technology into the financial services and making them cheaper, more accessible, faster, and better for everyone. So that's why it's one of the reasons why FinTech is one of the most innovative spaces right now. Many companies are taking offerings and they are making them better. So, for example, we have companies that are working purely on payments, companies that are working purely on investments. And so the FinTech space has a lot of different topics where you can learn from, and I'm going to be explaining many of them throughout my episodes. But overall, what I want you to understand before we start doing anything is that FinTech is going to be any financial service that has existed, but now it has technology. And so this is one of the things that is kind of weird because financial services per se haven't changed a lot in many years. So if we think of what banks do today and what banks used to do 200 years ago, primarily it's going to be the same function. They're going to take your money, they will store it, maybe they will give you interest, then they will give it back to you. So that basis is the same. The thing is that now with technology, we're making those processes faster, we're democratizing the access to finance, and we're also making them cheaper. So that's why sometimes all of the fintechs are giving you more yield and more profitability than traditional banks because they have all of it embedded in a financial infrastructure. And so for starting my episodes about FinTech, I'm going to start talking about the thing that pops to mind for most people when they're talking about FinTech, and it's challenger banks or neobanks. And these are going to be financial institutions that will operate primarily online without physical branches. And these are banks that use technology to be more agile, efficient, and customer-centric, basically. And when we're looking at what all of these challenger banks and neobanks are trying to do is include all of those that are underbanked or unbanked into the financial ecosystem. And so why are challenger banks and neobanks so popular these days? They have many competitive advantages. First, the digital experience is going to be very good because since they are digitally native, they offer a more intuitive user interfaces and simplified processes throughout the mobile application. The second thing, and the most popular among most challenger banks, is going to be that they have lower fees because they typically have lower operational costs than traditional banks since they don't have any brick and mortar stores. So this will allow them to offer more competitive fees or even to eliminate all the fees, and they won't even charge you for having money in their accounts. A third competitive advantage of Neobank is going to be that they have more innovative products because they quickly can introduce new products and services such as budgeting tools or investment options, and since they have a lot more data than traditional banks used to do without technology, this is going to allow them to improve faster and give you more services than the ones traditional banks do. Fourth element would be that they have greater agility and speed because, of course, they aren't carrying out all of the legacy systems that the old banks have. And the fifth competitive advantage would be that they focus normally on segments. So you're going to find that there are many challenger banks and digital banks, and most of them are targeted to specific segments. So you can choose better which of these banks is going to be targeted to your segment and get better advantages than the others. The thing is, though, not everything is good with neobanks because they have been facing some challenges, and even though most of the big fintechs have already solved them, there are some things that we still should consider. First, profitability, because many neobanks struggle to achieve profitability due to the low margins and especially the high acquisition costs. Because since they don't have established brand or established name, it's going to be very hard acquiring a new client, and especially if it's a client that's switching from a big bank into a challenger bank. Customer acquisition, acquiring and retaining these long-term customers is going to be crucial, and the banks that can't manage to have these new clients using them as the primary bank, which means you're using this account for everything that you do, it's not just your second account, is going to be one of the biggest challenges that these fintechs are facing. Also, another challenge that they face is competition because the market is becoming increasingly competitive with the rise of new neobanks and the responses from traditional banks that are innovating in their own digital platforms. So as you can see, most banks are trying to improve and kind of become fintechs themselves. Even though their products aren't changing, they're providing similar benefits to their users through their digital platform. The third thing that they struggle with is regulation, because neobanks must comply with all financial institutions, which is varying by country, so it's very hard for a neobank to be global, and also because regulations usually require you to have a lot of money. So for a company that's just starting, getting a bank license might be hard. And this is one of the challenges that many startups around neobanks or challenger banks are facing. Fourth element that we should consider is trust, because customers need to trust where they're putting their money in. And so building this trust is something very hard for new founders or new brands because they have to convince all of the users that they're going to be a trustworthy agent in order to keep their money safe. And the last challenge that they must face is risk management, because when you have more technology, of course you're going to be handling things better than traditional banks, but that will also probably bring more fraud, because fraud, especially cybercrime, is growing a lot. And so this is going to be a huge challenge for all of the neobanks. So if we summarize all of the challenges, they would be profitability, customer acquisition costs, the competition, the regulations, building trust, and ensuring there's no fraud. All of these things are going to be big challenges that neobanks are facing. And so as you can see, neobanks have a lot of pros, but they also seem to have a lot of cons. Nonetheless, I think we can assure that the entire world is starting to love neobanks. And some examples are going to be Nubank, which is a Brazilian digital bank that has a huge customer base in Latin America that already reached 100 million customers. And they are offering credit cards, savings account, and personal loans. They stand out because they have achieved profitability and they are exponentially growing in this region. Revolut is another second example. This is a UK-based fintech that has a global expansion expansion, and they have over 50 million customers already in Europe. They provide currency exchange, international payments, stock and cryptocurrency trading services, and they are also very, very popular. And another great example is going to be Chime, which is a US-based neobank that focuses its target segment on low-income customers because they offer accounts and personal loans that, for example, don't do credit checks and they give you early access to money. So all of these characteristics would be targeted to a specific part of the population, but nonetheless, they've grown a lot and they already have more than 10 million customers. And more examples can be Monzo, WeBank, AliBank. There are many neobanks out there. And if you know a cool neobank, you can drop it in the comments and let me know so I can look further into it. But in Canada, for example, we have Coho, Neo Financial, EQ Bank, Wealthsimple. All of these ones are going to be neobanks or challenger banks that are changing the way normal banks work. And so this, I believe, is a very good thing, the impact that neobanks are having on traditional banking, because first, they started bringing competitive pressures into an industry that never used to change. So neobanks are forcing these traditional banks to improve their digital services, to reduce their fees, to offer more innovative products and products that are more centered into what the client actually needs. And I think this is very good for the industry as a whole because more competitiveness will bring better services and better products. Also, this is pushing the entire industry for a better digital transformation, because if neobanks weren't here, they would force all of the traditional banks to heavily invest in technology or maybe to even acquire fintech startups that are going to make them stay competitive. And so this is going to lead to the third point that I think is very good, and it's that many traditional banks are doing fintech partnerships. So, for example, in the US, you have Zelle, where you can use it for transferring money. This used to be a fintech startup for a payment service, but it got acquired by big banks, and now it's used by most of the banks. And it started with Bank of America. So it's an easy way to innovate and to keep yourself competitive if you are acquiring fintechs and you are a traditional bank. So neobanks are expected to continue growing and gaining market share in the coming years, driven by the increased adoption of mobile technology, of course, and also the demand for better and personalized financial services. However, the bad thing is that they are fighting against this huge incumbent. So the consolidation in this financial sector is also most likely to happen, and that's why many neobanks are being acquired by larger players. But as you can see, this is going to be an industry that's extremely exciting, and I'm going to, in my future episodes, talk about more things that are going to be relevant to this industry and its particular things. I was telling you earlier that the hardest thing for fintech is going to be its customer acquisition cost, and we're going to dedicate an episode to explaining how this works and why marketing in fintechs is going to be so important. If you like my episodes, please share them with someone else who wants to learn about more MBA concepts. Also, write a comment or give me a review, because this will help me tremendously and it will motivate me to keep posting all of my notes from the MBA. Subscribe, and I'll see you in my next episode, because we're going to be talking about how to do a full funnel marketing approach in fintech.